Hey there, folks. Ryan here from Precision Trading Labs. What I wanted to talk about today is how to combine a supply or demand zone with gaps to potentially give you a bigger trade than you were planning, right? So, a bunch of you know, Mitch and I, my partner, we're full-time supply and demand traders. It's majority of trades, majority, it's like 99%. Mitch might do a couple others, some classical technical analysis for different things, but mostly at the end of the day we do supply and demand. And what I wanted to share with you is a demand zone on Walmart. Now the market's been pretty weak here, right? And I've have other videos about Walmart. It's just that there's activity, I trade it. So I want to share a trade from our trade room that Mitch laid out using. I'm going to start with the chart, and then I'll talk a little bit about the option. We bought calls in Walmart. Okay. All right. So here's the chart we shared. Let's see, what day? A couple of days ago, about a week ago. So there's Walmart after its earnings gap. You see where it just kind of like it gave bad guidance on stuff with related to the tariffs and stuff like that. I won't get into it. It's not my jam. But you'll see we had this gap down here, right, from the earnings announcement. Okay. Then, if you look down here to your left, Mitch combined these two demand zones to make one larger one. Okay. And then we laid out the option trade as buying the June calls. We buy a lot of time, not always, but when it's advantageous to us, like we don't know how long we're going to be in the trade and we don't really want to fight time decay, we need price to come down here. And then Mitch is saying, well, buy right around 92.70 with the stop right around 91.60. Right? It might be 91.50, but I'm going to pop up the live chart in a second, okay? And then price come down here, and then if it starts to go in your direction, if this is your demand zone, which you can see this how price left here, right? It's also very low here, what we call the curve, right? So you have a really good trade. It's just how much money can you make with it is the next thing, right? So let's use the live chart, and here let me just show you the analysis Mitch goes through. This is your P&L chart. These are the different price slices based on a couple of different factors here. Give you your potential. You're going to pay about $5.45 to get into the trade. Your risk is it could go to 480. Let's just call it 480. So 40 and 20 is about $60 per contract. So $60 risk. $60 risk isn't bad, and then you'll make about 300 if it just goes to 97.40. Okay. These are the price slices here, which will tell you like your different P&Ls, right? And we talked about this trade today in we have a group coaching set. We have 2 a week, right? And today was the second one before the weekends. And let's go to the live chart. Let's see where it went, and then I'm going to give you my example of combining the gap as part of your exit strategy, okay? And when I say exit strategy, I mean like taking profit. You're in the trade and you're getting into it. Oh, drawing's gone. All right, here, let me just redraw Mitch's demand zone, like so. Kind of had it draw like that, okay? Let's put some lines here. Stop at 91.50, I believe, or 91. Let's just go 91.50, okay. And 92.70, I think, was the entry point. I'm not going to get it perfect, but let's change that to green. Okay, so here's your demand zone. This is what we call the setup, okay? And then over here, I'll clean this up a little bit. This is your setup. Then there's the triggering event, okay? Remember, this isn't breakout trading, right? Supply and demand is not about that. So we need the trade to come to us. So price, here's that earnings gap. Takes a couple more days. And then on this week's slam down, bam, catches it right there. You're in if you had a limit order on the calls or you just set it up. And so Mitch bought calls in this trade here. Comes in, 92.70, and you can see a pretty nice, very bullish reaction. So here's this move here, okay? That's what we needed, okay? And then it went as high as 98.50. So let's go back to the eval chart and see what Mitch had, 98.50. Actually, wow, okay. So 98.20 was one of the potential targets he was using. And so that is, quickly, let me do the math, about 350 and change for this trade on one contract, right? So you had $700. Well, it's pretty good. Using $545 buying power, not bad for a swing trade, okay? Now, let me get to the gap part, okay, on this, like on how potentially you structure this trade. So let's say you had two contracts, you captured your 350 on one contract, right? And you see it's kind of stalling out here, where it's not necessarily, you're sitting not too far off from that upper point of where you were going to take your profit. But we still have the earnings gap right here. Okay, let's make that blue. Okay. So one tactic Mitch talked about today is if you held on to let's say you booked the profit on one, move your stop to break even on the second one, and now, or whatever, let's just say break even, but because I could tell you why. I don't want to get too deep into this, but we talked about why we would just do break even on this guy. And with the gap here, gaps tend to act like magnets, and price will eventually close that gap. Earnings gap a little bit. It's a little bit of a different animal, but it will close the gap. So if you are okay holding it up to 102, your 350 profit, another $5, it's another probably $300. So your 350 turns into maybe 650, something like that. So that's when you have your demand zone, and then you're using your profit target. We get out at one contract at your normal P&L that Mitch establishes from the option chain, and risk reward, a couple other factors. Okay, but since this is behaving so far, this is a potential magnet for price to close that gap and really turn it into we call it a runner, right? Where you're expecting a couple $100 or whatever it is, and it just keeps going. So that's how you could, and it could work in the reverse from a supply zone too, and a gap below. I don't want to get into that right now, but that is a Walmart trade from our community here, and we do trades like this just about every week, and then we discuss them on our coaching calls, take Q&A, all that kind of good stuff. And then sometimes we can get a little bit more advanced in our coaching call where we're in a trade, it's made some money, and it's kind of just hanging out there, so we got a chance to maybe capture a little bit more out of it. But at the end of the day, you should be protecting yourself with one of these trades. So as I said, you move your stop to break even, and you got yourself my favorite part of that is running a free trade, right? You booked a 350 profit, okay, on one contract. You've got your second contract, your stops at break even. You cannot lose money now. That's awesome. So when that happens, it's good to go. If you're a more simpler trader like I am, then I would actually say just bag the trade and take the profit, $700 for 2 days work. But if you're really going for that home run and looking for that push to close this gap, that's a way to really push the trade boundaries of like profitability. But rule number one, you got to understand your supply and demand first, and second, how to protect yourself. Third, then you can start getting more complicated. All right, so I went a little bit longer than I wanted to, so I'm going to leave it there. But I hope you enjoyed this trade recap video on buying calls on Walmart. What I would suggest now is that if you would like to see more of these trades in action that we give out every week, you should go to the link in the description or in the email that I sent to you and find the calendar booking links there. Click the calendar link. Look at my calendar, my schedule, when I'm available. Schedule a Zoom call with me, and I will show you these trades in action. Hopefully, we'll set one of them up on a actual one-on-one Zoom call, and we can see what your goals are and see if this will help get you where you want to go. And then we'll take from there. But hope you enjoyed this video. Also, if I could ask one last favor. If you like this video and you're watching it on social media or YouTube, if you would just hit the heart button or the thumbs up, like it, and if you would share it with your friends would be great, but would really appreciate that. So go ahead with that. I'm signing off now, but this is how you combine in this case, demand zone with gaps to get a little bit larger of a profitable trade. Signing off. Take care, guys.